Keep calm and carry on buying AI tech stocks as they deviate from the highs. Where the greater the deviation, then the greater the buying opportunity presented. Keep calm and carry on buying. Quantum AI tech stocks. So the S&P ended 2023 at 4,770, a raging bull market that has been missed by most, as 2023 proved to be another year where the consensus got it very badly wrong. Doom and gloom, a recession was seen as being a done deal, as it was for 2022. Then there was the debt ceiling nothing burger. QT? What QT? We had Stealth QE via reverse repo market and the banking crisis nothing burger. Plenty of reasons why not to invest, all the way down from the likes of Stanley Drunken Miller, he was bearish, through to the perma fools on the CNBC Cartoon Network, clown claimer, blogosphere, all convinced most to park their funds in T-bills and money market accounts paying 5% peanuts. Just pause for a moment and take the chart in that I've been iterating since June 2020. The message one should be receiving is that I expect this stock's bull market to run for many more years, that I expect it to target a return of 6x over some 7 years on where AI tech stocks stood during June 2020. Whilst my best guess 3.5 years ago was that we could see a major top during 2027 as long as runaway valuations moderated from time to time, delivering buying opportunities as they did during 2022. Then I don't see why this should not still remain the big picture. Thus, the bull market that began in March 2009 could continue to fulfill my original expectations for an 18-year bull market, where even the bear market that follows it will prove temporary as the bull market once more resumes during the 2030s. We are now 4 years into the roaring AI 2020's. Whilst AI will lift all boats due to huge leaps in productivity, however, obviously we want to be focused on the core AI and its primary derivatives, hence quantum AI tech stocks portfolio. The greatest danger to capitalizing on huge AI gains is yet to come, is to get sidetracked into sectors such as bond, mining, commodities and so on. That's the real danger, to diversify and dilute, which is a huge mistake we are all guilty of, including me. We are just too fidgety to stay focused on the big picture and hence dabble in stuff that we know little about. Even now I'm off on living climate change, investing in a few climate, but it's a fraction of my portfolio, just 2%. You know, we're all guilty of it. It's another one of those things that most take for granted, which is in reality wrong. To diversify is wrong. I continue to see war with China as being inevitable that could turn a quantum AI stocks bubble mania crash into a true multi-year bear market. Thus my primary strategy remains to buy the periodic deviations from the highs in the good and fairly valued AI tech stocks, as we experienced twice during 2023, in March and then in late October, while several more opportunities arose randomly during the year, such as AMD plunging towards $80 early May 2023, which is why you often hear me state that the S&P is a nothing burger, a red herring in terms of investing in target stocks. If you focus on that, you'll miss all the opportunities, either to buy or sell. Whilst I expect AI to continue to deliver an exponential uplift to economic activity, which will continue to surprise the econo-fools who think in linear terms and thus completely fail to understand what is taking place, hence are stuck in a default setting of a recession is always coming. Even now, recession is imminent, recession is due, recession signs, they're blooming clueless. Given that the models they are using are based on decades old theories, if They just plucked it out of the air. Hence, we are in the roaring AI 2020s that most would only see with the benefit of hindsight. I mean, we're nearly halfway through it now. Look back in some years' time and write reams and reams of worthless economic papers about it, as if they had any clue of what was transpiring at the time. I mean, this is 4 years into the roaring AI 2020s. Yeah, that I flagged in June 2020 to expect. We've had the LLMs of 2023 that will continue to explode on an exponential curve during 2024. You know, there's tip of the iceberg. GPT, was it 4 is tip of the iceberg. When GPT-5 comes along, it's going to be explosive. As explosive as GPT-4 was. The difference being that GPT-5 will be reliable. GPT-4 hallucinates, so it's less reliable. It's more intelligent than the average human, but it's less reliable in terms of you can't trust its output. But GPT-5 will be even more intelligent. I can't put IQ score on it, but it'll be more intelligent and it will be more reliable than humans, so you can give it tasks to do, which means a lot of people are going to lose their jobs. And after that, what we're going to get the Tesla is going to come with its Optimus bots during 2025 and beyond, to be followed by several competitors. The future is literally rushing towards us at an ever faster pace. All wise linear minds cling on to decades-old comfort blankets. They don't have a clue. This decade is the worst time in a century to be bearish on stocks, especially AI tech stocks. Some fools on the Cartoon Network still call it AI hype. The AI market can easily grow by 20% per annum, and that's an underestimation. Driving earnings in AI tech stocks, whilst 20% per annum might not sound like much, but through the magic of compounding, today's global AI market of roughly 600 billion becomes 1.5 trillion in 5 years' time, and 3.7 trillion in 10 years' time. And 20% is likely to turn out to be a conservative growth rate, given AI's explosive exponential nature. You know, at the end of the day, it could be 30% plus. This illustrates the problem with looking at past data. The pre-AI era, that ship has sailed. We are living in the AI age, so one needs the secure interpretation of economic data in that light of the AI prism, such as the consensus econofools view that the end of Fed tightening cycle tends to be followed by a recession, which I'm sure is all you're going to hear for the whole of 2024, that the recession is still coming, just as was the case for 2023, 2022. Given what I see coming to pass in terms of AI, I would not be surprised if we don't see a recession for many years. And say even if a recession happens, it doesn't affect target stocks, earnings growth, then it won't result in a drop in stock prices. You know, if the earnings don't fall, they're not going to fall in stock price. Where the advantage of my patrons have are the metrics I track in my portfolio that constantly show which stocks are strong and which stocks are weak in terms of their fundamental metrics that I will return toward the end of this extensive analysis. This video is just a mere fragment of my extensive analysis that concludes in a detailed stock market trend forecast for the S&P for the whole of 2024 that aims to replicate my forecast accuracy of past years. That's 2023, 2022, 2021 and 2020 and 2019 and earlier still, all the way back to probably 2007. All of which was first made available to patrons who support my work for just $5 per month, which is nothing compared to what you're getting access to. Lock it in now for $5 per month, because it soon rises to $7 per month for new subscribers. This is your last chance. After this, there is no turning back. You take the blue pill, the story ends, you wake up in your bed and believe in Google. You take the red pill, you stay with Market Oracle, and I show you how deep the rabbit hole goes. To ensure you ride the AI megatrend gravy train into the future and the crypto gravy train during 2024, then you consider becoming a patron by supporting my work for just $5 per month, which is nothing for what you gain access to, and it's due to soon rise to $7 per month for new sign-ups. Access to my latest mega analysis, a comprehensive 3-part guide on how to really get rich during 2024 that has exclusively been made available to patrons right now. You can go and read the 3 guides right now, full access, which is a truly epic piece of work that took me the whole of 2023 to write, which condenses down my lifetime knowledge and experience down to some 60 chapters, which is on top of my ongoing analysis and trend forecasts that are made available to patrons for just $5 per month. There are no bolt-on extras, no courses, no the crap that all these con merchants do. You get full access to everything for just $5 per month. Lock it in now because it will soon be rising to $7 per month for new sign-ups. So, did you buy the October 22 bloodbath? Especially in tech stocks, FANGs, with the likes of Meta plunging below $100? Well, I and my patrons did. Go read my articles and the comments posted under them. We got well blooded by catching all those falling knives. Did you make the mistake of listening to the likes of Clown Kramer on the Cartoon Network, who stated Meta, amongst others, was finished? Meta finished at $100 a share, was the mother of all buying opportunities. This clown stated it was finished. Says it all about Clown Kramer and the Cartoon Network.
They're finished. They're finished as places.
They're finished. They're finished as
places to invest.
We keep talking about this falling knife as if the knife continues to fall. Though there are people who look at this and say,
look, I'm looking at the money coming out. Where's the money coming from to buy to buy industrials? It certainly isn't coming from new people saying, "Wow, it's time to put money in the stock market," because they get such a great rate on the 2-year. I think it's money coming, rotating out of companies that have dominated this market for the last decade and into companies like Caterpillar who actually know what the hell they're doing.
Are you thinking that the tech companies that I think that you're disappointed in are going to get religion, if you will, and get disciplined? And what does discipline look like?
You know what they are? I would call them atheists. They believe in nothing.
That's a nihilist.
Meta? I don't know. I think they have to change the name again. They really do. I mean, you can't be saying Meta. I don't know. How about loser? How about stupuda? I don't know. Anything doesn't even matter. I don't know if they can make a comeback. The facts have changed, and I have to change with it. I believed. I thought I'd be safe. I was wrong. Bottom line, forget being leaders. Big stocks are now followers in a post-COVID era, where we're learning that their earnings were far more inflated by the pandemic than we knew. We're just now discovering that tech emperors have no clothes, if they're even emperors at all.
$5 per month is nothing for what you get access to. So at least give it a try. Read the comments, see the depth of analysis. You won't be sorry because I do my best by my patrons. Go that extra mile. Gaining access to over 35 years experience. Right from before the 1987 crash, straight through to this stock's bear market. That we ride the quantum AI megatrend into the future.